Hello, my dear viewers! Once again, I'm here, yours truly, ready for another task of this channel, Adorable Edu Info. For today, this is just a continuation of our previous discussion regarding accounting entitled Accounting for Everybody. Before we proceed, allow me first to make the connecting link between our previous discussion and our discussion today. We have already settled that in our accounting equations, there are three major accounts that are involved, such as assets, liabilities, and capital. For today, I prepare to discuss the five major accounts in accounting. But before we proceed, I'm inviting you once again, if you are just new to my channel or you are just a plain viewer before, once again, I'm encouraging you to please pindot na. Press the subscription button plus the notification bell, choose all, so that you will get notified and be updated every time I have a new presentation. I promise you that you will always the winner in this channel because I'm trying my best to provide you the necessary information, the newest information as far as I can. Likewise, I'm encouraging you to please be responsive, be interactive with my channel. Don't hesitate to state your comment. Use the comment portion below. Your suggestions if you have, your sentiments, your reactions, anything you want to express with me, and I will deal on your messages. I will be responsive likewise. So let's proceed with our subject matter, the five major accounts in accounting. What are those five major accounts? And these are assets, liabilities, capital, income, and expenses. Before we will proceed to connect or to reconcile income and expenses with our accounting equation, because the first three, the asset, liabilities, and capital, we have already discussed those three accounts previously in our discussion. Before we will connect income and expenses in our accounting equation, let's first discuss the definitions of these five major accounts so that we will have a holistic overview with these five major accounts. What is an asset? Let's start with an asset. An asset refers to any resources owned by a business. It refers also to value of ownership, an item of value owned by the business, or the entire property owned by the business. As simple as that, anything owned by the business are considered assets. General classification 1 for the first major account in accounting is assets. Let's proceed to liability. What are liabilities? These are something the business or the company owes. These are financial obligations. These are future sacrifices of economic benefits or pecuniary obligations. In short, these are payables. As simple as that, liabilities are payables or obligations something owes by the business. Let's go now to capital. It also refers to equity. A capital or equity refers to shareholders' equity. That is in the case of a corporation because the ownership is divided into shares of stock. It refers to the investment of the owners to the company. When it comes to partnership, capital or equity refers to partners' contribution to the partnership. When it comes to sole proprietorship, the capital refers to owners' investment in the business. Let's proceed now to income. What is income or what are income? It refers to revenues. But what are revenues? These are money received from selling of goods in case the company is engaged in trading or merchandising. It refers also to the amount or money received from selling of services in case the business engaged in service business. It likewise refers to a gain or a benefit which are usually measured in money. It likewise refers to earnings, gains, proceeds, profits, yield, interest, all of those are considered income. So, those are the sources of revenues. When it comes to business, all those sources of revenues are considered income. How about expenses? What are expenses? These are money spent or the cost incurred, or these are considered expenditures or the cost of operations. So, anything amount spent which are associated to income, in order to gain an income, you have to spend. Those expenditures are called expenses. Let us proceed now to the crucial issue of our subject matter for this segment, which is how to reflect income or expenses in the accounting equation. With regards to the first three major accounts, the asset, the liabilities, and the capital, we have already discussed that previously. In fact, our accounting equation is asset equals liability plus capital. Take note, the fourth and the fifth major account representing income and expenses cannot be found in the accounting equation. There is no income account and there is no expense account in the accounting equation. So our problem is how to reflect income and expenses in the accounting equation. For those who have already taken accounting 1 or accounting 2, I just want to take note that our accounting equation is equivalent to statement of financial position, previously called balance sheet. Once again, take note, our accounting equation is equivalent to statement of financial position, previously called balance sheet. Now, how do we reflect our income and expenses with our equation or with our statement of financial position? Here is now a simple procedure or a way, a method on how to reflect our income account and expenses account in our accounting equation or in our statement of financial position. Take note for the beginners so that you don't have the hard time analyzing so many things, because you cannot just simply read it in the books. You have to read and read many things before you can come up with this kind of analysis. So, here is now the simple procedure. First, you have to compute your income or loss. But when do you compute your income or loss? Income or loss should be computed at the end of a particular accounting period. Therefore, prior to the end or at the process of the accounting period, you cannot or you are not computing your profit or your loss. You have only to compute at the end of the operation or at the end of an accounting period. So, in order to reflect, you have to first compute the result of your operation, or you have to compute first whether you earned an income or whether you earned a profit. If in computing, you find that your income is greater than the expenses, then you earn net income. But if your expenses is greater than your income, then you incurred or you suffered losses. If the result of your computation, you earned a net income, then in order to reflect to the equation or to the statement of financial position, that net income, take note of this is an important point, that net income will be added to the capital or to the equity. On the other hand, if in your computation, you found that the company suffered or incurred losses, that loss or losses will now be reflected in the equation or in the statement of financial position by means of deducting that loss or losses from the capital or from the equity account in the equation or in the statement of financial position. This time, let's have now an application to the rules by means of having 5 simple transactions. Then, we will try to post these 5 simple transactions in our accounting equation. Our first transaction is on August 1. Juana invested 100,000 pesos to her business called JRTW. So, this first transaction must be posted in our accounting equation. Here is now our accounting equation. So, on our first transaction, there will be a posting of 100,000 representing asset because the owner, Juana, put 100,000 in her business. And the reason for putting that is her capital. So, on the left side, there is now a posting of 100,000, and on the right side, capital, there is now a posting of 100,000 under our transaction number 1. Let's go to our transaction number 2. On August 2, the loan for her business was released by DBP amounting to 150,000. So, let us post once again this transaction number 2 in our equation. So, another cash now was put in the business of Juana amounting to 150,000. Therefore, in our number 2, there is now a posting under asset of 150,000. On the right side, there is also a posting of 150,000 under the column of liabilities because that amount represents obligation or liability because that is a loan from DBP. Let's go to transaction number 3. On August 3, she purchased merchandise amounting to 200,000. Let's pause once again this transaction number 3 in our equation. So, number 3, there is a posting under asset in the amount of 200,000. Why? Because that is in the form of inventory. She purchased an item and that is considered an inventory using perpetual method of recording. So, there is a posting inventory 200,000 because that is an asset. There is likewise a posting under number 3, a deduction of 200,000 that represent a deduction from the asset because of the payment. She purchased, of course, she received an inventory, but she likewise made payment of 200,000. That's why there is a deduction of 200,000. Let's go now to next transaction, transaction number 4. On August 30, she recorded the total sales for the month amounting to 250,000. Cost of sale is 60% of sales. So we have to record transaction number 4 in our accounting equation. There is a sale of 250,000. Because there is a sale, of course, there is a payment. So, we receive payment amounting to 250,000 in the form of cash. And cash is an asset. Therefore, there is a posting of 250,000 in the asset side. There is now a posting of 150,000 deduction in the asset side. What is that deduction? That represents the cost of the sale. It is stated in the problem that the cost of sale, meaning the cost of the inventory sold, is 60% of sale. We have already studied that whatever the amount as basis is considered 100%. So the basis is sale 250,000. That 250,000 is now 100%. The cost of that sale is 60%. So 60% of 250,000 is 150,000, representing deduction from inventory. Nawalan ng inventory kasi naibenta, and the amount is 150,000. Next transaction. Let's proceed to transaction number 5. On August 30, she paid salaries, rental, electricity amounting to 60,000. This transaction number 5 represent expenses that are being paid at the end of the month. Total of 60,000. Let's have now to pose in our equation the transaction number 5. Under number 5 in our equation, we have now 60,000 as a deduction from our asset. Why? Because this represents deduction of cash because of the payment of expenses in transaction number 5. She paid expenses. Therefore, the cash was being reduced by 60,000. That's why there is a deduction of 60,000. Take note, in our equation, there is no income and expense accounts here. That's why the expenses cannot be outrightly posted in the equation, as well as the income, like sales, cannot be outrightly posted in the equation. We have to observe the rules. We have to compute first our income or loss. We have to make first a computation. Now, before computing whether there is an income or loss, we have to take first the balances of our equation before computation. Under asset, our balance is 290,000. Under liabilities, take note, 150,000. And under capital, 100,000. So the total on the right side, 150 plus 100, the total of the right side is 250,000, but the total asset, the amount in the left side is 290,000. Therefore, our equation is not yet balanced before the computation of income or loss. So, let's check. Let's now proceed to computing whether there is an income or loss, and the result of our computation will be posted in the equation. Let's see if the equation will become balanced after the computation of income or loss. Here is now the computation of our income or loss. This computation, take note once again, this computation is synonymous or the same with our income statement or the profit and loss statement as called before. This is now called also, the income statement before is now called statement of comprehensive income. So, our computation is equivalent to statement of comprehensive income. We have a sales of 250,000. The cost of that sale, meaning the cost of the inventory sold, is 150,000. Therefore, our gross profit from sale is 100,000. 250 sales minus 150 cost of sales is equal to 100,000, representing our gross profit from sale. From that gross profit, we have to deduct our operating expenses representing the amount paid, equivalent to 60,000 pesos. So after deducting these expenses from our gross profit, we have now a net income of 40,000. We are now ready for the application of our rule. Remember our rule before that in order to reflect income and expenses in the statement of financial position or in the accounting equation, we have to make first a computation in order to determine whether there is a net income or loss, and we are done on that computation. The result of our computation is that there is a net income of 40,000. So, let's go back now to our accounting equation, posting the net income in order to reflect in the equation. So, our net income, as our rule, the net income will be added to capital account. So, since our capital before is 100,000 and we have now a net income of 40,000, so our total capital after adding the net income is now 140,000. Our liabilities remains 150,000. Adding liability of 150,000 and a total capital of 140,000, therefore the amount in the right side is equivalent to 290,000. this 290,000 liabilities plus capital must be balanced with the left side or the total assets. Our total asset is 290,000. Therefore, our equation now is balanced after posting the result of the operation, which is net income of 40,000. Therefore, our rule is now confirmed. We can only reflect expenses and income in our accounting equation or in our statement of financial position after making a computation or after the preparation of income statement, otherwise or called now as statement of comprehensive income. So, our claim or our rules is now very much justified. I'm pretty confident once again that I have contributed another segment of educational information after this presentation. I do hope that everybody who are interested in learning accounting learned something out of this episode, especially the students. Take note, you cannot just simply read in the books because what we are doing here, we are giving or I am giving the direct result of those so different analysis. You have to read and read many things before you can come up with those analysis and those final results. I hope you learned something. Next time, we will discuss here the principles of debit and credit. The second most important principle is for you to understand, especially you student, to have a wholesome understanding on the principle and rules of debit and credit so that you will integrate your knowledge in the accounting equation with that rules of debit and credit, and you can proceed all the way. You can understand deepest analysis required in studying accounting. Thank you so much once again. I do believe that this presentation becomes fruitful to everybody who watches, who listens, all my subscribers and viewers. Thank you so much to all of you. For those who have not subscribed yet, before we part ways, do subscribe, press the subscription button, as well as the notification bell. Comment your suggestions or your reactions in the comment portion. Thank you to all of you. Bye-bye. God bless. Maraming salamat po.